Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening as we're sitting now on Monday, and this is the 10th of November, 2025, from a snowy Chicago. And the time that I have right now, looking at my watch, is 6:15 p.m. Central Time, so we can see where we're at. You're getting a bounce in many markets because they're euphoric in the idea that the Senate can pass some type of a bill tonight. That's what the prayer is, at least, and get that into the House. Then Speaker Johnson has a call to bring back the House representatives. They have 36 hours to get back. Then they can debate the bill. Then they can vote on it. So the earliest I see anything happening, assuming tonight you get a vote in the affirmative, would be Thursday, most likely between Thursday and Saturday, if the Senate can reach a decision-making process. You've had a bunch of crossovers, which is a good thing. I think they're realizing the American public's not going to stand for this, and the president's taken his rough stand on it. Let's see where it all goes. Nobody wants this to continue. Next, what is tomorrow? It's an important day. It's Veterans Day. Thank all the vets out there, active, that served, that aren't with us anymore. They kept us safe and alive, and we're a free America because of them. NFIB Optimism Index comes out at 5 in the morning. They're looking for a 98.2 versus a 98.8 in September. The Fed Governor Michael Barr is going to be speaking at 9. I have no idea what he's going to speak about. I saw Moran speak today, and as usual, he's quite dovish. The market, he thinks more cuts are needed. Mary Daly, not quite the same way that he was. Now, pretty flat right now on the energy markets. And remember, the market anticipated and went up for the natural gas and the heating oil for the first storm of the year, the first cold blast. I just got off the phone with one of my friends that lives in Florida, and he's saying, yeah, we're getting ready for cold. Well, you know, everything's relative to what cold is, of course. And another friend I talked to in Phoenix, it was, 80 degrees. So everything's relative. I woke up, it was 25 in Chicago, so gives you where you're at. Bonds and notes are pretty flat right here. You're still seeing selling pressure in the yen specifically. The other currencies are sort of a mixed bag. Nobody quite is getting a feel here. What do they do? Once we see the Senate make its move, if it can get that done, then we probably get a little more action. I still expect that by year end, you will have new highs in the stock indices. I'm not in that camp in the gold market. I'm still bullish, very bullish in the silver market, very bullish still in the copper market, just so you can realize where I'm coming from there. And I think you can flip a coin which way the dollar is going to go, X the yen. And that's because which way are interest rates going to go here? And that becomes very important as we look at where we're at. Now, when you look at the S&P, as you can see, you're making your comeback. You're near, on a closing basis, the prior high close, but it's only Tuesday, early trade, so we'll see what the market can do with that. You've had this big decline. The question I had at the beginning, and I think you remember that, was I said, what do you do here to fill a gap? And we filled it. Then the question was, how low would the break go? Well, we can now see that Friday's low was it, and when we heard that on Friday that the Senate was taking up the matter and going to have a vote of sorts on it, which they did, and which they passed, that they would vote on the bill, which they still haven't done as I'm talking at least. We'll see what happens. The market has come back for that euphoria. But you have resistance points up here that you have to pay attention to. The market still has a pattern of lower highs, lower lows on what's called the swing line, which is this brown line that I attach to every day's trade. I wrote this study years ago so that my son, and he's now in his 40s, but he could walk into a room and tell my friends on a chart if the market was bullish or bearish, take out a pencil and he can draw it. It was amazing. They'd go, and what's the risk? And he would show it to them. They go, how do you know that? And he would review it. It's so easy to learn, and it's such an important tool. But in any case, what you've got here is a market that's fighting to stay with bullish momentum, and the slow stochastic reading is right at all-time highs. So if it wanted to lift, it can go up there real easy, is what I'm saying. In terms of momentum, you're trying to turn the momentum back up after it had been down. So that's going to carry us then over to the NASDAQ. And in the NASDAQ, what we have is also a market that went down. It made a run for the lower Bollinger Band on Friday, turned around, and today you're back over. It's a very similar pattern. Momentum stopped its decline. It can pick it up in terms of the decline again or go from here to the upside, but you don't have an uptrend. So the S&P and the NASDAQ, you can't even create off the current chart pattern without getting tomorrow, outside days to the upside, which means taking out the highs and lows of Monday and then closing higher on Tuesday. I mean, I don't see that happening. It doesn't happen that often. When we come to the Dow, momentum seems to be dying here. The market made a stand and is still making it at the 18-day average of closes. But even if you get through this recent high, you'd have a pattern of a lower low and then a higher high. So I'm not seeing that as turning bullish. And I see the resistance at the 18-day average in the Russell, which has been the most beaten up of the indices. If it rallies, the upper Bollinger Band should be pretty stiff resistance. We then get to the DAX, and it decided it liked what the Americans are doing. It's good for everybody's business, and kaboom. You take off, you went through these highs, you've ended the downtrend, but now you've got the resistance at the 18-day average in red and the 100-day average, void of a trend and correcting an oversold condition. Then in the 10-year note, we have a market that is just hanging here in oversold territory. The problem is nobody knows what the Fed is going to do at the next meeting, all right? It's not around the corner. I mean, this is only November 10th. We still have plenty of time for the December meeting. But what kind of data will they have? And just how bold will our Fed members be? They're void of a lot of data. They're doves, there are hawks, there's those that don't want to go too fast, they don't want to ignite inflation. There are others that said we had to do what we did to shore up the labor market. Is it shored up? That's the question that they're asking, so they need the data. You see in the 2-year notes, the battle is the 100-day average of closes right here. Void of a trend though. You have a higher high and lower low and you're oversold. I don't know what to do with that. In the dollar index, the resistance showed up first at the combination of the gray line here, which is the 200-day average and the Bollinger Band. You went over it for 2 days and then bang, right back under it or onto it. Momentum is turned down. It's not like the market's getting euphoric here and screaming to the upside. We have price counts to the upside, which are still higher. I don't trust them right here without enough data. So when I don't see the data, markets need a combination of the fundamentals and chart work to keep going. Otherwise, you're just sort of spinning wheels. Be very careful of that. When we look at the euro, you've had lower highs, lower lows. You've hit your downside target. In fact, you ran it for 3-4 days. Then the market spun away. It never did embed. The resistance to me is the 18-day average of closes. We'll see if the market can get itself going to the upside or if it fails against it. It's not giving a signal. The Aussie dollar is more bullish than bearish. This market at least has higher lows, higher highs, momentum turned up. The big battleground, first, it went up and stopped at the 100-day average. It went to the Bollinger Band, and then it came down for 3 days, fought there. When it came down, went back into the downtrend, and magically it's fighting again at that number. So the 100-day average is fairly important, but I would give right now the bulls the bias, but is it a bargain to be looking at the market and saying, oh, I want to get long right here in the 65.30 area with a stop all the way under here? I'm not convinced that's worth it. Then I looked at Bitcoin. So I'm of the opinion Bitcoin's probably bottomed out right through here. That does not mean I've joined the bull camp and I'm ready to run and say it's ready to go back up there. If it does, terrific. But I'm not seeing that pattern. I'm seeing the end of a bear trend, not the beginning of a bull trend just yet. Then when we look at the energy markets, your battleground's crystal clear. It's the 18-day average of closes. You've got the swing line down, the bias up, the momentum pointing down, but the market doesn't seem yet to be able to get under that number and build on anything from it. Same things in the WTI crude oil. You got up off the storm, right up into the heating oil Bollinger Band. What do you think I would tell you when you hit that the first time? And I think the pros are taking money off it. If you wake up and you're down very much, I don't consider what it's down right here very much, that could lose the bullish embedded reading. Right now, the pros are probably buying this break, and they'll play it that way, that if they see the red line then where it looks like it's going to stay under 79, they'll probably bail on that trade. Natural gas has the bullish reading. Again, first cold spell. You don't want to get overly bearish on that, but take a look. What do I teach you here regularly? The 200-day average, Bollinger Band together. Pros are taking money off the table, not buying it up against that. Can I prove that? No, but I see it enough on the charts over and over that I'm very comfortable making that statement. So we'll see if the market can do anything with momentum, if it can keep it or not. Pullbacks, we know, I look for support in this, by the way, strong support. Right in here, the combination of the 100-day average and the 18. And while America's comfortable in natural gas, a lot of the world isn't. And with all the pressure coming on, remember, Europe, they don't want them to buy natural gas from Russia anymore. So this market gets bids in the wintertime is something you think of. Last but not least, if you're interested to join me in the mornings, in the morning at first, at 6 in the morning, I record my futures video. That's Central Time. I go through 40 some odd charts, specific buy, sell, do this, do that. And we track the trade that I recommend from beginning to end if it's filled. The second, at 9 o'clock, I do the Spider ETF stock one. And I like to give the market the first half hour. Now, if they went to 24-hour trading in the spiders, the stocks, and all that, real 24-hour trading on the exchanges, I would change when I do that recording. But until they do that, that first half hour is where you get a lot of the funds balancing their books. Well, here's what happened overnight. Now we got to balance out where we're at. So having owned a stock firm, having owned commodity firms, I think I know what I say with some of that. So how do you get these? It's simple. Go to iraepstein.com research, sign up for it right there. There's an icon up here if you move your cursor, and there's one right here if you're watching me on YouTube. Give them a click and join. That is where I'm very specific on buy here, sell there. I'm Ira. You have yourself a great evening. Thanks for watching. Watch the other videos, and I'll catch up with you in the morning.